Good morning from London. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. We're an hour away from the opening trade. Here's what you need to know. Donald Trump wastes no time after taking office, signing dozens of executive orders and signalling tariffs on Mexico and Canada while holding off on China. Asian markets whipsaw and the dollar firms following the commander-in-chief's flurry of late-night activity and comments. And Bridgewater's Ray Dalio warns the UK could be heading for a death debt spiral. We will bring you the latest labour market data as it breaks.
And speaking of that labour market data, we're getting it crossing the Bloomberg terminal right now. Those September to November wages, excluding the bonuses, rising 5.6% on a yearly basis. The estimate was 5.5%, and yet very tiny moves, lower weakness on the pound that we're seeing. Cable at a 122 handle there, but it really is a dollar strength story. You're seeing this across the board in the 24 hours since Donald Trump was inaugurated, specifically when it comes to that tariff story. We can flip the boards and really take a look at how that shows up, because it is weakness in the Chinese yuan, weakness in the Mexican peso, even a little bit of a damper on risk sentiment when it comes to the future story. The countdown to the opening trade starts right now.
We're thinking in terms of 25% on Mexico and Canada, because they're allowing vast numbers of people. Canada's a very bad abuser also. Vast numbers of people to come in and fentanyl to come in.
When do you think you would enact this?
I think February 1st.
T+1, and President Trump is already sending the markets on a roller coaster ride around the world. Just for context, that was 1 a.m. in the morning, London time. Just to give you an idea of the fact that we are definitely going to be needing 24-hour trading going forward from here, because these policy announcements are going to come at odd times. They are not going to be what you're expecting, and the market is going to continuously get caught off guard. That is the narrative from the last few hours, you could argue. The policy mix looks a little bit like this. North America first seems to be the narrative. Big focus on the domestic agenda yesterday, less on the international agenda. But I include North America deliberately because, of course, Canada and Mexico are firmly in the mix, Kriti.
It's a really fascinating one, because at the end of the day, it's the very first thing he mentioned in his inauguration speech. Already you're seeing it reflected in the markets as well. It also comes just hours after reports and comments, really, from the Trump administration to be that the China tariffs may be something that's put on the back burner for a little bit, and that's what moved the dollar more than kind of what he already campaigned about on North America.
Yeah, so it's whether you focus on the "it wasn't China and it isn't coming today" line out of tariffs, or whether you focus on the fact that he's re-upping the Canada-Mexico lines that we know about, and he's putting a date on them. So we do have a date, February 1st. I mean, that's an intention, and is it just designed to bring people to the table, etc., etc., as we talked about many times? Is this actually, he mentioned migration and fentanyl, drug trade across borders, and so is this a way of galvanising that conversation in a hurry?
Is there really any relief for China here? It was stunning how little China was mentioned in the whole inauguration process over the last few hours.
I guess it's just not day one. Is that enough?
Precisely.
Yeah.
Big domestic focus, day one. That's where we focus. We focus on immigration. We focus on all the issues that people actually voted on.
Yeah.
Then we deal with China further down the road. But is there really any solace in this for China? Like 25% for Canada and Mexico. If that's what you do to your nearest neighbours, what happens next with China, I think, is a big question.
Yet? Is that's the silver lining that some are clinging to?
Yeah, I mean, your guess is as good as mine. The Trump tariffs is just one aspect, though. I mean, so much of it, to your point, was focused on the domestic policy. Bloomberg Economics did some analysis a couple of months ago around what that kind of immigration stand may actually look like. They concluded that if you start to really crack down on immigration, pull up the border, have these deportations, which, of course, he promised in his first couple of hours in the Oval Office, you do actually see a hit to GDP going into 2028. It's as simple as a smaller population hits demand, hits supply, and that means less GDP down the road.
It does matter what he does with legal migration, though, doesn't it? And that takes us on to some of the broader themes coming out of the inauguration. So away from just the trade theme, some of the other things, migration was clearly in the mix, and he focused a lot on the Mexican border. But we did play some sound in the last hour of him talking about how he's a big fan of legal migration. We need that, he said. We're going to need that because a lot of people are going to want to put up their factories over in the United States. So migration, along with energy, getting a lot of mentions. Panama getting a spectacular number of mentions. Ukraine not getting any mentions.
It was amazing. So China so little, Panama so much. That was, I think, probably one of the big surprises to me, just how big a focus there was on Panama. But I guess that's kind of included in the kind of the North American narrative that we're watching, and maybe that rolls into the China story as well. But the immigration story, I think, takes us to tech. And the dominance of tech yesterday at the inauguration was absolutely stunning. The names that were kind of there. I was watching it with my kids last night, and they were like, "Oh yeah, there's Elon Musk, and there's Jeff Bezos, and they were stunned by the importance that tech had in this transfer of power."
This like kind of red carpet of who's who, billionaires worth about $1.3 trillion, all standing in that one line, one row ahead of those cabinet members as well. But my big question here is, if the theme of tech in this Trump administration is deregulation, what can these tech CEOs do now that maybe they couldn't before?
Yes, well, a lot of people have asked what, because we also saw him taking action on the energy front around electric vehicles, which maybe, in years gone by, we might have thought Elon Musk might not agree with, but clearly there's something that he sees in it for him, and will it be around deregulation? I suppose we could speculate, and no one will know the answer to this, but which of those big tech names will still be there at the end of the administration as either fans of Donald Trump, supporters of Donald Trump, working for Donald Trump in the Doge department, as Elon Musk will be.
But the energy story is also important for them too. If you think about what the AI narrative is going to deliver, and he basically rolled back a lot of the checks and balances that the Biden administration put in to the AI space. To your point about sort of deregulation, that's maybe where the opportunity is for these people as well. The other thing is energy. They all talk now about the fact that they're energy constrained. If the United States becomes a land of opportunity for energy, then it's a land of opportunity for tech, and deregulation. You fold that in as well. That's quite a positive cocktail.
Even at the weekend, he was talking about data centres as being one of the drivers as to why he wanted to take this, which is quite a forward-thinking, yes, positive, tech-friendly cocktail.
And already making steps towards one of the key pieces that Joe Biden has pushed back on, which is the Keystone Pipeline. That's basically, for a global audience, the pipeline that runs right through the middle of the country, kind of west of the Mississippi, and then gets to the terminals in the Gulf of Mexico, which may be named the Gulf of America soon. Who knows, according to it. And then ultimately exports LNG to Europe. So this is so very much a European story.
Sorry, we call the channel the English Channel. The French don't call it that, strangely enough. So we can all have different names from different bits of water.
Mosh. He didn't mention Europe, barely mentioned Europe yesterday, which is interesting. Your point about Ukraine is really interesting as well. But let's turn our attention just quickly to this data we've just had out of the UK. In very strong wage data, I think is the narrative. What I find fascinating, and Kriti, you highlighted this just a moment ago, is not much reaction. I do wonder whether the market's caught between this kind of fear that the Bank of England isn't going to be able to go as far as maybe anticipated because of the wage data, what that then means for the government. And you could argue that the rate differential story should be positive for the pound, but the government fears and what is happening, the chaos in Westminster, is negative for the pound. I wonder whether those two are offsetting each other this morning.
Well, I mean, or is it simply just a dollar story more than it is a pound story?
Yeah, maybe they're just other bigger stories. But that's interesting, isn't it? Because in a sense, what we've seen in the UK play out has been also a dollar story and a US fiscal story. And yes, there are UK fiscal concerns, but there was a guest just yesterday talking to us about how there might be this developed marking fiscal concern, and the UK might pay the price, even if the market is also worried about the United States because of currency of last resort and all the rest. I mean, the wage data was higher than expected, but it wasn't blowout by UK standards, was it?
No.
So maybe that also stops it moving too much.
And you do wonder kind of how the Bank of England is reading the labour market at the moment. So difficult, given the data and the inaccuracy of the data that we're seeing, certainly. All of this, obviously, front and centre for the conversations we're going to be bringing you over the next few hours out of Davos. During the opening trade, we're going to hear from Sarah Fryer, the OpenAI CFO. UniCredit's Andrea Orcel is going to be joining us. Rafael Grossi, the IAEA Director General. Saint-Gobain CEO is going to be up a little bit later. Arthur Mensch, the CEO and co-founder of Mistral AI, is also going to be on deck. Technology, a big feature of the Davos landscape as well.
Yeah, so those are some of the interview highlights. Bloomberg coverage continues from Davos throughout the day, of course. Some of the other highlights coming your way. The Bank of France Governor, François Villeroy de Galhau, Amin Nasser, the CEO of Saudi Aramco, Sergio Motti, the UBS CEO, Novartis Chief Executive Vaz Narasimhan, and in banking, the leaders of both Commerzbank and Bank of America. I think that's pretty much every sector covered.
And I'm sure there's plenty more. Let's take you live to Bloomberg House in Davos right now, where Bloomberg's Shirin Ghaffari is in conversation with Sarah Fryer, the CFO of OpenAI.
Thank you, Shireen. And first of all, thank you, Bloomberg, for having us today. It's been amazing to spend my first 24 hours in Davos and to see that AI is really top of the agenda, and I think appropriately so. You're right, there's been a lot of hype. Sam did tell everyone to chill. So one message, just chill a little. And he's right. We do internally feel that we have a path towards AGI. We had a big breakthrough in 2024 around reasoning models in particular. So you saw us move from a world of more chat models, chatbots, ChatGPT, fastest app in the world, to 100 million users, and today well over 300 million users. But last year, we really started to see the progression into reasoning and what we call our O series of models. So O1 Preview was launched, and now we're all the way to O1. Hopefully, you've all tried it. And what do those reasoning models do? They really start to help you think about difficult problems. So you see the model. One of my favorite things to do is actually watch what it's doing in real time. You see it go down chains of thought, trying to answer the prompt that you've put in. You see it sometimes hit a cul-de-sac. It doesn't quite get to the answer, and so it almost has to reverse course and try a different approach to solving that problem, a lot like the way we all do, to ultimately give you the best answer. And frankly, I think often the answer is not a definitive singular answer. It's an exploration. It's a way to continue a conversation. We are upping the pace, so we just went from O1 to we previewed O3, which is the second model. We like to confused sometimes with our nomenclature, but O3, that just took 3 months. And if you think about the length of time from ChatGPT 3 to ChatGPT 4, that took about 2 years. So the pace of innovation is really accelerating. What's it like to work at a place like that? It's exhilarating, it's inspiring, it's sometimes exhausting, and it's definitely done with a sense of privilege. I think all of us at OpenAI think a lot about the magnitude of what we're bringing into the world. We think about it with regard to safety, with alignment, but also with the optimism of what it can do when you can put that sort of human intelligence into the hands of kids in schools, when you put it into the hands of teachers, when you put it into the hands of our colleagues at work, and we're just getting started.
Absolutely. So you mentioned reasoning. Can you tell us a little bit about how this kind of really advanced reasoning that OpenAI is coming out with, how does that translate into real customer value for you? How are you seeing OpenAI's users actually, gain productivity, gain insights from that?
Yeah, so reasoning is on the path to agents. And we really feel that we're now moving into this era of agentic technology and into a world of agents. So what we see today with the reasoning models is they are for some of the most difficult problems. We see it used in areas like pharma, for example, deep research into new molecules that help us think about drugs and drug discovery. Those have been some of the areas that I have been most excited about the progress so far and how people are taking the O series and using it. But as I talked about with agents, and I'm sure you're probably going to ask me
yes, and let's define how do you, because everyone has a
different
different sort of idea, but what's your take on what an agent is? And,
yeah.
how, and Sam has said agents are going to be acting as employees, right, in 2025. They're actually, and so where do you think we'll actually see agents start to do the work of real people first? What sectors do you think it's going to hit?
So it's important with agents, first of all, to think about why is it even possible? And so that's why I made the point about, with reasoning models, that kind of cul-de-sac that a reasoning model goes down and then has to back up and try a different way to solve. Because in an old world of deterministic software, effectively the developer or the architect had to in some ways envision all the possible routes that a question or an output could take. Today, with a reasoning model, it acts much more in the way that we humans think about problems. And so that starts to bring forth this idea of agents within our workplace, maybe even just as task workers alongside us every day. So some of the earlier things that we are looking at is how do we use agents to just solve day-to-day problems? Like, I'm a working mom. Often I'm in that, all the women in the audience just smiled. You're in that moment, you're like, oh no, it's that 5 o'clock. I have still got multiple hours of work. I've got to get home. There's supposed to be something on the table to feed my children right now. My husband is really useful, but maybe not all the times the most useful. What am I going to do? And this is a moment when you think about an agent that can perhaps figure out, what am I going to get delivered to the home? I don't want to have to be specific. It's like, please get me something healthy. We had pizza last night, not Italian. Let's not do too many carbs again. Might know my budget, might know what local restaurants I typically have ordered from, might come up with a new idea. So that would be an agent more in my personal life. But you're also starting to see this dawn of agents in our workforce. And so it may be areas like software development. It could be areas like research within labs, deep science. We see many folks here at Davos, heralding that age of agents in areas like customer relationship management, for example. So I think that you're going to see a lot of companies talking about new agents coming to the forefront. Customer success is another one. But you've got to remember what that is built on top of, and it's really built on top of these reasoning models that we, OpenAI, have brought into the world as the frontier technology and the frontier company.
Great. Let's talk a little bit about your bread and butter, which is the world of finance, right? How do you top a record-setting VC funding round? What is next? What do you expect this year in terms of, and obviously AI costs a lot, right? The cost of computing increases year over year. So what can we expect? Will there be another mega round in 2025?
I could be glib and say something, but I won't. I'll hold it back. Look, our technology is built on three things. Great people who are building the most frontier algorithms and models in the world. It's built atop of tremendous amount of compute. And I think we're just scratching the surface on that. And then, of course, data. And in the world of compute, in order to buy that compute, to have access to it, to control our own destiny, we have had to do an extraordinary amount of fundraising. Luckily, we also have a business model that supports it. I already talked about ChatGPT for consumer, over 300 million users today. That is and it's a workhorse when it comes to revenue growth, and ultimately profitability. But we are seeing now enterprises of every size embrace this technology, and we really see ourselves also as the enterprise company. In fact, there's a really good symbiosis between those two areas, because often when I meet customers, and I'm meeting a lot of them here in Davos, it's actually their personal experience they start with. When I say, hey, how are you using ChatGPT? They'll actually give me a personal anecdote first. And for those of you who sell into enterprises, you know that if you've won your customer heart in just their day-to-day, being able to go in and then sell them into their enterprise environment gets an awful lot easier. And so that enterprise model is really building across every sector of the economy, every type of company, every scale of company. And I'd be happy to talk through examples. Morgan Stanley is a great example, since we're talking financing, and they're also a good partner on that front. But they're using our technology in areas like wealth management, in areas like even their investment banking, and they've been doing it now for multiple years. So in terms of the future from a financing perspective, I suspect we will continue to have to finance at pace, but we will do that on the merits of our business as well.
How about an IPO? What would that look like for OpenAI? You mentioned profitability. How far do you think we are from that? What are, you're someone who's taken two companies public. What would the steps be for OpenAI to get there, and how far are we from profitability?
Yeah, so as I've told every company I've been associated with on an IPO, it's not a destination. An IPO is just a marker on a journey. And if you get wrapped around the idea that the IPO is the destination, it's a very kind of dangerous world to live in, because there's a feeling of finality, and man, oh man, going public is just the beginning of another very interesting part of your journey. Like, what are the positives of an IPO? Number one, I think it's a very strong credentializing moment for any company. I love that moment of sunlight, of being able to show your financials externally, to show how your business is building. It's the best disinfectant in any room. It's a great way to fundraise, because it opens the door not just to equity and selling your equity in that moment, but it also starts opening the door to many more areas of financing. Starting with mezzanine debt, structured debt, and so on. And again, in a world where we're buying a lot of compute, we need to get there fast, because equity is an expensive way to raise capital and to deploy capital. We need to make sure we continue to bring down that weighted average cost of capital. And then the third thing that I like about an IPO, I say that somewhat tongue-in-cheek, is it does add an element of rigor and discipline to the company's cadence. That is a very good thing. the reason why I kind of, caveated the statement is you need to be very careful it doesn't make you short-term.
Talking IPOs and general intelligence, that conversation, OpenAI CFO of Coursera Free talking to Bloomberg at Bloomberg House in Davos. A really interesting way to kickstart this hour's coverage from Davos then, Guy.
Yeah, and interesting that she's talking about an IPO, which I suspect will be music to the ears of the next panel we are going to take you to at the World Economic Forum. Bloomberg's Jemana Besetchi is moderating a panel looking at where banking goes next.
To then go forward and participate in that growth. So capital markets activity is one, it's powered by growth. Another one is towards alternatives as an asset class. That's an important evolution. The US wealth market's an important evolution. Companies focusing on what they're great at and outsourcing is another one. So when you look across all of these different megatrends, there's clearly this opportunity, I think, for firms like ours here on the stage to be able to actually go forward and contribute. I'll pause because I think my microphone isn't working.
Yeah, well, and hopefully your microphone gets fixed, but I do want to ask, there may be unintended consequences of dialing down on regulation, and feel free, any of the others, to weigh in on this. It was not so long ago, 2023, we were talking about the failure of some of the regional banks, and some of the views out there were that the dialing back of Dodd-Frank regulation was partially responsible for some of the failures that we had in 2023. Is there a risk that this deregulatory drive could end up with some unintended consequences further down the track for the banking sector?
Right, maybe I'll start. So I don't think any of us here is saying that we should not have regulation. We think it's important for the financial sector to be well regulated. What we're seeking for is a balance, right? A balance that combines fairness, the ability to protect the institutions from bad outcomes, but at the same time to facilitate lending, economic growth in the countries in which we are involved in, and to do it in an open and transparent way. That's, I think, basically what we're asking for and seeking in the various jurisdictions in which we operate.
Robin, did you want to add to that?
Yeah. Look, regulation has been stifling, I'll borrow Mary's term, over the course of the past few years. And it's really against the whole purpose that governments around the world have of sort of trying to enable growth for their countries. And I think if there's one thing that we've learned over the course of the past year or two, it's that if you don't have growth, you don't have the ability to pay for everything else that you want to do. There are so many governments around the world that have these great ambitions. They want to build infrastructure. They want to be able to invest in their public services. They want to be able to promote the lifting up of populations around the world. If you don't have growth in your economy, you can't do that. And so why would you have excessive regulation that ultimately are going to stifle growth? We need the right regulation. It needs to be supportive, but it needs to be in furtherance of the growth goal.
Yeah. So here we're talking about the Basel III endgame, but what we need to talk about is every jurisdiction has their own regulatory framework. And I think we are ending up in a situation where there is scope for regulatory divergence between, say, the regulation that is applied to European banks versus, say, the regulation that is applied to US banks. UK recently also announced that they're delaying the implementation of the Basel endgame as well. How do you think of this sort of regulatory global divergence right now, Bill?
It's a real issue, but I think this is a good time to take a step back and think about what works in regulation and what doesn't. Going into the financial crisis, we had very low levels of capital and very uneven levels of liquidity. And that turned out to be a disaster during the financial crisis. Both of those things have been addressed through a kind of brute force. So you can Basel III endgame, frankly, is fine-tuning. It doesn't matter. And even the U.S. banks that got very upset at the prospect of significant increases, it's not really going to matter at the end of the day. Business model shift, and but once you got the appropriate level of capital and liquidity, it's entirely necessary to step back hugely from the microprudential supervision that banks are subjected to. Thousands and thousands and thousands and thousands of man hours spent complying with micro rules, with highly intrusive regulation into the basics of a business model. that can't possibly be caught by a regulator, as we saw with Silicon Valley Bank and others. There were basic flaws in the operating model at those banks that were exposed during a time of stress. Had they had the basics right of capital and liquidity, they wouldn't have had those problems. So when we talk about regulation, I mean, sometimes we're talking about, we're being asked to have too much capital. I say forget that fight. We're guaranteed by governments. JP Morgan is guaranteed by the U.S. government, as we saw. Every bank in the United States was guaranteed by the U.S. government after Silicon Valley Bank went bankrupt. That's a disastrous outcome for society. And the same thing would happen in most other parts of the world. So as long as we have that government backstop, we're going to be subject to capital requirements. Let's live with it. But let's focus on getting the really intrusive part of regulation out of the game. And then once we've got the capital set appropriately, let's get it set consistently globally so that we don't have this arbitrage from market to market. That Basel 3.1 or 3.1 endgame, we'll see if we can get there. I'm a little bit skeptical that we're going to land, but maybe we're converging.
Yeah, it doesn't seem like that the wheels are in motion there. Your Excellency, as central bank governor, you also play a role as a regulator as well for the financial system. I'm just curious to see how you, from your standpoint, how you think not just regulation, but some of these other trends that I touched on at the top are going to influence the direction of travel for the financial industry.
Yeah. Thank you for having me here, Jumana. First of all, as a regulator, how do we look to the financial sector? Our main role as a regulator is to protect the financial sector and to protect the banks and make it the financial industry more stable and bring stability to the financial industry. If you go back, why the banking sector is heavily regulated now? Let's go back to 2007, 2008. After financial crisis, the regulator became more conservative. But I think now everything has been changed. The banks were very well capitalized. The market is doing well. So what we need to do, we need to take a balanced approach regulation. Balanced approach where we are not too much easy and too much conservative here, and to balance between the new emerging, for example, a new emerging trend in the market, such as technology. Technology now, if you look to the technology, it emerged with its risk as well. But shall we prevent that or allow that? No. I'm with allowing the new technology and the banks to be able to utilize the technology. And the regulator should be there to protect the banks by issuing guidelines to protect the banks and the customer data as well.
Yeah. So it's finding that balance really between allowing for innovation but also keeping the system safe. Venkat, I want to,
just chime in on that.
Of course.
Because sometimes when we are up here every year talking about banks and bank regulations, it sounds very self-serving. But if you just think about almost every scenario where you need regulations in government and public and private sector to come together, as His Excellency was saying, and you just look at some of the issues that we've been having most recently on the energy front, and California is a perfect example of that, where you have the best intentions of regulations to try to control burn in California or to try and figure out the safety and security of water. And then you result in California fires because you haven't done controlled burn, you haven't had a reservoir built since 1979, you don't have the fabric and materials to build fireproof housing, and you end up with the disaster that we've had. And the same thing is being talked about overnight about Germany and the fabulous success that Europe has had on the move to electrify most of that they've done with renewables. 50% of what is done on the manufacturing sector in Europe is done with renewables. But the problem is now Europe has 5 times the cost of manufacturing that some of these other countries, particularly China and India, but even twice as much as US. And so you say to yourself, no wonder Germany has now found itself last night on the bottom of the list of the 30 countries with GDP growth forecasts for next year. And you've got to figure out how you get those two things in balance. It's not just about banking and banking regulation.
Yeah, and I think that's a nice segue to what I was going to ask Venkat, actually, because you penned an op-ed this weekend in the UK Times about some of the growth and productivity challenges facing the UK. Obviously, UK Bank, big exposure to the US. U.S. banks seem to be benefiting from a bunch of these tailwinds, be they on growth and sort of a lighter regulatory or expected lighter regulatory touch in the future. But in the UK, and Mary just highlighted some of the issues facing Europe as a whole, but they're also very pertinent to the UK too. There's a serious competitiveness and productivity challenge. As a UK bank, how do you counter some of those sort of strategic headwinds or long-term headwinds?
Yeah, so what I would say at the beginning is that I'm very optimistic about the UK. I think it is a very open economy. It's a dynamic economy. It's got great skills, great soft advantages, law, language, location, education, learning. But it's also got a lot of hard skills, the financial sector being one of them, the second biggest in the world after New York, but also in semiconductors, in life sciences. So there's a lot in the UK to commend it. But it comes back to what we said. Mary said it, Robin said it, everybody has said it, which is that what we're trying to get is economic growth. Mm-hmm. And we're trying to get economic growth in the context of a free economy. And banks play a role in it, but we're not the only people who play a role in it. We're there as transmitting credit. And what I was saying in the op-ed is that there's a lot to be optimistic about in the UK, and what people should look for is the continued effort, which this government has been doing, to be clear about what it's going to do in regulatory reform. As you said, Basel has been postponed in the UK for a couple of years, till 27. What it's doing in regulatory reform, what it is doing to free up investment in the country, across the country. And I think that's what's important.
Yeah. Robin, you wanted to weigh in? Yeah.
Just hearing some of the folks on the panel talk about this, it sort of reminds me that, all of us here run large organizations. And when we're trying to achieve a goal, we try to line up all of the pieces at our disposal in furtherance of that North Star. And so we're driving our organizations in a way we're trying to coordinate all of the different pieces to achieve that objective. And I think there's a little bit of a lesson here for leaders of the various different countries around the world as they're thinking about what is their North Star. And the UK is a good example. They've declared it as growth. And then how do they line up all of the various components in furtherance of that objective? And so the UK has talked quite a bit about the fact that they need to reform planning and permitting in furtherance of making growth easier, to invest in infrastructure, to attract new investment in. And so thinking about it in that way, how do we run countries over time to be the best performers that they possibly can be with all of the individual components pointing in the same direction to achieve the goal?
I mean, tying it back to sort of, global growth, and I have conversations with people and have had over the last couple of months, people continue to emphasize this concept of U.S. exceptionalism, the fact that the U.S. is powering ahead. As Mary said at the top, it's go time. Bill, from an international bank standpoint, how do you remain competitive versus the U.S. banks?
Well, our role at Standard Chartered Bank is to be a connector between different markets. The U.S. is one of those connectors. So we have a big business in the U.S., certainly not on the scale of either J.P. Morgan, Barclays, or BNY Mellon. But it's a very important connector market for us. And as much as we talk about globalization going into reverse, it's not. But it's changing its nature very fundamentally. Trade volumes are going up and will continue to go up. We'll see some really interesting ructions, I think, as the Trump administration settles in. We'll see what comes through in terms of tariffs and reconciliation. But we know that China is a very big part of that in terms of having a gigantic export surplus. And that will be under attack from all parts of the world. So the question for us is, how does that connector role change? It's still going to be there, and I think we're well positioned to take advantage of that, as are most banks that play that role. I think that it's probably tougher for banks that are purely local in low growth markets. And but as a practical matter, there are fewer and fewer of those, and those are the ones that will consolidate quite aggressively. Alternatively, the global banks that are able to take advantage of this connector status, or who have a big business in these very fast-growing markets like the U.S., will have a competitive advantage.
Your Excellency, I want to ask you about growth before I move on to another topic. We've talked about some of the headwinds perhaps facing Europe, UK economy. US seems to be on the right track for now. How do you see it from your standpoint and just sort of the signs, the signals you're getting from the East and from the West?
Yeah. Actually, I would like to start referring to the latest publication by the IMF. IMF latest publication, they are forecasting, expecting that the global economy will grow by 3.3% 2025. Comparing to 2024, we will do better if we reach 3.3. However, if we compare it to the
Bloomberg's Jumana Bersetchi in Davos moderating a panel on the future of banking. She, of course, has Mary Erdos out of JP Morgan, Robin Vince out of BNY Mellon, and a slew of other guests on that panel, Anna.
Yeah, absolutely. Let us take a step back from the activity on the slopes in Davos and think about the market response to what we heard from President Trump yesterday in his inauguration and his flurry of executive orders. Let's talk about the markets in 3 minutes. Our Markets Live executive editor, Mark Cudmore, monitoring all of that news flow and, of course, everything we're getting out of Davos as well. Mark, let's start with what we heard from President Trump then yesterday in the various formats that we heard it. Some people taking a sort of risk-negative message from what he said about Canada and Mexico. Others, and I think you're in this camp, saying, well, actually, don't worry too much. It wasn't China and it's not today. So we have a little respite on that sort of risk-off tariff story. Your overall assessment?
I think overall it was very much a risk-positive message from Donald Trump. I understand that things can change. I understand that he's considered unpredictable, but we just have to take the facts at face value from where we were a few days ago. You take this day a week ago as an arbitrary starting point. At that time, it was expected that day one or day two tariffs would be announced on China to some varying degree. Now we have a study on China trade, which implies nothing is coming imminently. So already that is a massive win for global markets, given that China is such a key global economy and the key global trade partner around the world. So that's a big positive. The other one is that we were expecting some other tariff measures. And now already, for example, the threatened ones on Canada and Mexico that are the ones people are most worried about today, well, they've been pushed back to February 1st from potentially being January 20th or January 21st. So they're already being 11 days later. It seems like these tariff threats for the moment, the message from yesterday is these were more about negotiations. And also remember, those 25% suggested tariffs by February 1st, Trump could have done them yesterday if he really wanted to. That was in response to some questions. It was kind of off the cuff and is in line with his campaign speech. Clearly, there was no desire to do it yesterday. Also, he made some other comments about talking about people could essentially, European countries could avoid tariffs if they kind of buy oil from the US, etc., which again, all these things imply that those who believe the tariff threats were more of a negotiating ploy are currently in the correct camp. That may change in the future, but for now, the message is very much risk on and dollar negative.
Well, Mark, talk to us about what is actually priced in then. If we're just talking about negotiations, so much of this was priced in on the campaign trail when it comes to, say, Mexico or Canada, for example. We'll put China on the back burner. What's priced in to EM currencies right now?
It's really hard to work it out exactly. I think that the fact is these currencies are significantly weaker against the dollar since the election. And I think you see in the short-term reactions this morning, when we are currently trading the narrative, no new tariffs from day one, before the Canada-Mexico comments are made, these currencies, 11 of the 16 major currencies on the Bloomberg, rally by more than 1% against the dollar. We are seeing really, really powerful moves. Then when we suddenly got the headline threats of 25% against Canada and Mexico by February 1st, sure, they paired those gains, but not so much, apart from obviously CAD and Mexican peso itself. So I think overall there's an asymmetric risk here on the dollar, and I think it's more likely downside without a big shift in narrative again.
All right, Bloomberg's Market Live executive editor Mark Cudmore giving us a little bit of analysis on the first 24 hours of Donald Trump. We thank you so much. You can get more up-to-date analysis from him and the team. Just type in MLIV Go on the Bloomberg terminal. Guy.
I want to take you back to Davos. Francine has just sat down at the Bloomberg house in Davos. She is sitting next to UniCredit's CEO, Andrea Orcel. Let's take a listen to their conversation.
We look at our clients and we say, well, we would like to help you, but we're taking risk zero, and we are supporting you. They're going to look at us and say, well, hang on a second, what's your value added? So I think the management of risk is at the core of banks, and banks need to have the right controls, the right regulation, but need to be able to take that risk. So too much deregulation is not a good idea. Too much regulation is, or too little regulation is also not a good idea. You need to find the right balance. At the moment, the expectation is that the US will be well ahead of Europe in terms of being less regulated, and given that US banks do operate in Europe, that will put us at a competitive disadvantage.
I mean, do you expect regulation, and we've seen that in the UK last week, do you expect European regulation to just take a pause and wait to see what the US does?
Well, for the time being, there is a lot of discussion about where regulation is going to go. But for the time being, the indications are that Europe will maintain its course on regulation and will maintain the position where it is. And I think to a certain extent, if this is a steady state, this is something that we can live with, and that is correct. If it continues to tighten, then it becomes a difficulty.
How worried are you about competitiveness in Europe? What do your clients tell you?
Look, I think more generally, if you look at Europe, Europe needs growth. I think we need to rethink what is the vision for Europe, what is the strategy for Europe, and we need growth. Without growth, we're staying behind. We're already behind. It's going to get even worse. And in a way, if you look at growth or industrial growth as a car, the banks and capital market unions are the gasoline of that car. We cannot finance that growth, that transformation, that economic policy that we want without that feed. So if banks are not strong enough, not big enough, or overly stringently regulated, and we don't have a capital market union, we may have all the plans in this world, but we're not going to be able to finance them. At the same time, and you see it in a number of economies in Europe, banks from other economic blocs are coming in. And when we talk about competition in countries like Germany, we talk mostly about American banks and maybe one or two European banks that have an approach to Germany in a certain way. But the real competitors we fear are American banks.
I know you have skin in the game, but why is it so difficult to have a capital markets union?
I think that, like everything in Europe, I think we celebrate our differences, and I think this is important. And being Italian, I think when I go through Italy, I need to explain to people that what I get in Milan is different from what I get in Rome, from what I get in Palermo, and they all have different views, and they're very happy to tell you why they're better. So it happens in every country. It happens across Europe, and I think that's one of our strengths. But I think our biggest weakness is we're not capable to say, well, these 5 things we're going to put to common denominator because we can benefit more from doing it together than separately. And therefore, you have all this regulation, all these schemes, but there are always flexibility for each single state to implement them or not. And it always ends up being that on one or the other, a part of the European Union members implement and a part did not. And therefore, we continue to have fragmentation and inability to build industries that go across Europe.
So someone who I know is watching on air asked me yesterday what Andrea Orcel is like, and I just said, he's bold. You've surprised investors, you really shocked governments by buying a big stake in Commerzbank and offering to buy Banco BPM in Italy. I mean, what do you want to achieve, and how fast do you want to achieve it?
Well, I think it's a little bit a connecting of opportunity with interest. If you look at UniCredit, actually I was being criticized for 3.5 years for not engaging in any M&A because I thought firmly that the bank required setting back on the right tone, unlocking, releasing trap potential. And we always said that at the right time, at the right terms, we would look at it. If you look at the key markets for us, where we can do an in-market merger, strengthen the group, and move the dial very significantly, you get Italy, you get Germany, and not really in market, but for our CE, you get Poland. And it just happened that the opportunity to do something in those 3 markets came relatively at the same time. It also happened that we are exiting 3 years of transformation. We feel we are more ready than ever to to do the next 3 years with even greater success. But at the same time, we have a team that has shown they're capable and that is capable of integrating and capable of accelerating what we can do alone with this acquisition. And if we do them, great. And if we don't, we will have tried at least.
Your moves have irritated governments in Germany and Italy. Did you predict the backlash?
No, especially in Germany. I think there has been a lot of debate on that. But honestly, I struggle to see what the debate is based on. I think beyond the fact that HVB and Commerzbank have been talking to each other in both directions for over 20 years, because it's one of those deals that you always want to do because it makes a ton of sense, but for some reason it's always derailed. In the last 2.5, we probably have had, and I probably have had, meetings with both leadership of the government and leadership of Commerzbank in the tens. We bought a 4.5% stake in anticipation that the government would sell their 16.5%, and we wanted to be at the level of consolidation. We were invited actually by the government as the only strategic to buy their stake, the first sell down at 4.5%. We did that in a transparent process. Actually, we were the best bid, and we were asked to bid again at a premium to what we had offered in order to get the entire stake. We agreed on a press release. During that process, we interacted again with the leadership of Commerzbank, warning them that we were going to participate. Commerzbank was the first call we had in the morning to debrief on where we were. And from there, it moved to surprise, well, imagine ours, and then it moved to hostility or to opaqueness. Well, from the first day when we bought, and the Minister of Finance was well aware, we said we would ask authorization to go to 29.9. We did, and we executed that. What we changed was because out of respect of both the government and Commerzbank, we said, well, given that the emotions are what they are, let's wait for elections. Let's wait for things to calm down, and then let's have an opportunity to, instead of talk about perceptions, talk about facts, talk about figures, talk about the merit of the deal, the red lines, and one in front of the other, try to see if there is a base to move forward or not. At the end of the day, Francine, for us, I would say it's a statement for Germany. We're trying to invest in excess of 20 billion into Germany at this point, and I think that says it all.
So when people say you're untrustworthy or not transparent enough?
Well, there were other things that I was told in the past and now have been superseded by facts and over time. I really, on this time, while I could even say that my own government could have been surprised at our move, I cannot say that the German government and Commerzbank have a base for these allegations.
I mean, February 23rd is when there are the German elections. Do you expect something to change for you then?
Well, I don't know. What I think will change, or I hope will change, is an opportunity to invest, to instead of focusing on perception of what we might do, criticisms based on many times bias and other expectation of the past, that we can sit around the table and compare notes. I do think that the transaction, if we go back on that, it's excellent for Germany. Over the last 4 years, I chaired the supervisory board of HVB, and I got to a great conviction that Germany has, first of all, that Europe does not exist without Germany, and secondly, that there was a great opportunity. So the two banks are very complementary. There is a lot of value to be created, and not only for shareholders, I think for clients, where we could compete in a better way versus both local and foreign competitors, and for the people of both banks. So in our book, sitting down and saying, what is it exactly that is wrong with this deal, and what is it exactly you do not like, and how can we eliminate that from the table and get to an agreement? That process that we haven't had an opportunity to go through, not with the government and not with Commerzbank, and it's not for not asking. I think I either met or wrote a letter to every party leader in Germany explaining where we are, and I do realize that in the middle of election is not the right time. And I also do realize that until this is settled, it is also difficult from Commerzbank to engage. But the biggest thing that I have, that I hope to get from election, is an ability to interact.
What can you tell us about job losses? I mean, I know this is one of the worries in Germany, and we're expecting also an update from Commerzbank mid-February.
There is a lot of expectation and a lot of allegation on what would occur from a combination that has not been offered yet, because we haven't sat down. But if you look at UniCredit in the last 3 years, we did exit quite a few people. I don't think you have ever read in the press, not in Italy, not in Germany, not in any of our markets, that we did that in a way that the Workers' Council or the trade unions were against. That means we found a way that was shared to reach it. I think everybody focused on job losses, but we start before, at the origin. What is the vision for this bank? What is the strategy for this bank? What are we trying to achieve? Efficiencies in the industry are a matter that needs to occur. But at the same time, if I take UniCredit in the last 3 years, we probably reduced costs by 1.5 billion, but we reinvested in the business through upgrade of our physical network, digital, data, our factories, hiring new people, training new people, our university, 1 billion too. So it's not only about we made efficiencies, but we actually reinvested the large majority of those efficiency into the banks, which then brings us to, number one, having the people of UniCredit behind it, because they say, well, I understand what we're trying to do and where the money that we're saving is going. And secondly, it brings us to being in a really strong position now to address the next 3 years that are going to be quite challenging.
So we sometimes play this game in the newsroom of whose job would you not want to have right now, and I think it'd be your M&A advisor. I mean, are you ready to walk away from the deal?
Yes, of course. I mean, we implicitly walked away from deals in the past several times. So we walked away from Monte dei Paschi. There was a leak last time we tried to approach BPM, and we walked away second time. There was another leak that pretended, obviously it was not very advanced, that we were going to do something with Commerzbank. We walked away from that as well. So I do think that maybe for us, or for me in particular, there was the never-ending story, does M&A add value or does M&A not add value? And I think M&A adds value if it's done at the right terms, at the right time, in the right way. Otherwise, stay away from it. For us, we have an exciting proposition at UniCredit. I think for us, demonstrating what we can do in the next 3 years, demonstrating that not only we can continue to deliver at the level we were delivering, where people say European banks are over earnings, but actually add 1 billion on top to that and improve the profitability. For that is the exciting venture. If on top of that, given that we have confidence in what we can do, we can do acquisition at the right terms, integrate them, and further accelerate what the potential we have, not only for us, but also for the targets, great. And if not, I honestly think that if I take the next 3 to 5 years and I compare the prospects that UniCredit has, given the transformation and the investment with those of the average bank in Europe, we have no pressure in wanting to do anything because we will have great results.
Okay, let's talk about Banco BPM. A lot of investors say your offer is too low. Can you increase?
Well, let's put it this way. It's like starting with job losses as opposed to the outcome of things. I would say the following. Our offer on BPM is at a, depending how you calculate, 15 to 20% premium to where the bank was trading a month prior, what you would call in M&A undisturbed price. What happened in that month is that they announced a bid for Anima, where the market reacted positively on the transaction and assumed that it could be done at that price in full. Well, already yesterday there were rumors that they may not get the Danish compromise, and if they don't, that transaction may not occur or may not occur in full. If that is the case, on the day it jumps 10% and over the period 15%. Should I pay a premium over that? The second thing is, straight after that, there were a lot of speculation of a merger with Monte dei Paschi di Siena. And again, the share price took another 5%. So again, that merger is not occurring for the moment, and should I pay a premium on that again? So if you look at undisturbed price, we're at 15, 20%, is that we think it's a fair starting point, especially because when you look at their multiple versus ours and our resilience versus ours, We think we are significantly undervalued, and they are probably fairly or overvalued. We'll see. We'll see. In any case, it's premature. I think at this, let's see how banks perform in Q1, in Q2. Let's see if Anima is done or not. Let's see a number of other topics. But at the moment, we stand firm on our offer, and we think it's appropriate.
Okay, the $1 million. Are you meeting with the Crédit Agricole CEO in Davos? Because I know a lot of you actually follow banks very closely, but Crédit Agricole controls 15% of Banco BPM, and there's also a distribution agreement, right, through its asset manager Amundi. So you really need them on board.
I think, look, there is a lot of speculation on Crédit Agricole. I would say the following. They're key partners of ours. We account for probably 70 or 80% of our investment go through Amundi in Italy. We have a contract with them. The contract ends in 27. We also do custody with them in Germany. We work with them between our factories and their investment bank are quite tight. We do a number of things together. So we didn't need to wait for BPM to talk to each other. There have been continuous dialogue in the last 3 years. I think we have a lot of point of contacts and a lot of common interest. If you ask me whether I am optimistic on finding a solution that is respectful of the par condicio for all the shareholders of BPM that works for both banks, I'm optimistic. But at this point in time, it's premature.
Are you optimistic about the Italian government getting behind the deal?
Well, I think, as you know, every time, and we've had this discussion over the years, every time you touch a bank, everybody has an opinion. And I do think that, it is fair enough that they want to determine the level of competition, what will happen next, because we would become quite a large institution in Italy. We would have 15% of the market. Actually, because of our overall size, people forget that in Italy we only have a 9% market share in loans and deposit. So we would go to 15. We would be a strong number 2 to Intesa. But I think it's fair enough that they want to make sure that competition remain, commitment to the Italian Mittelstand remains. Branches are kept open in the areas of Italy that are more remote and but these are all things that it's not a concession we're determined to do, and that's why we're buying the bank. So there again, we take the course of the so-called golden power as an opportunity to sit down, and it's quite structured, and to highlight all of the elements. And I'm actually quite optimistic that we will convince them.
But so golden power is basically a veto, which they're trying to play. If they put that, do you walk away? Is that a deal breaker?
Well, I think the golden power is, if they were to apply it, that is not just I can decide whether to play or not to play. But I do think, honestly, that if we put aside all the speculation of the press, the process is a lot more technical and constructive. And I would say, for now, I can only say fair, and people make it to be.
If your legacy is not buying these, banks, do you worry if you fail at buying this, or is there something else that you're
think one of the
on?
biggest. I think one of the biggest problems in M&A is that not buying equals failure. And I don't know, I don't see it like that. I think is buying at the right terms means success. Not buying at the wrong terms means less a success, but still success. Buying at the wrong terms means deep in success. So for me, if the walk away is because the terms are not there, or because we're not accepted, or because shareholders decide not to move, fine. As I said, I think we are already touring all the banks of the group. We've done 3 at the moment. And the view that we have on our opportunity this year is quite optimistic. As I said yesterday to our town hall in Germany, it's the first time that in January I see smiles when I go around, and you never know if it's because they just ended the holidays or because they're very optimistic about what we're doing. But going back on that, I think, to quote Warren Buffett, it is when the tide goes down that you see who is wearing trunks. And I think we have been talking about higher rates, low cost of risk, and inflation. And in the next 3 years, it goes exactly in the opposite way. Lower rates, high cost of risk, higher inflation. This is the tide going down. I think every bank is telling you, I have it all figured out. I don't think so. I think there will be a big divergence between banks that have it figured out, have transformed, have lines of defense, have levers to offset and grow, and banks who have instead spent the last 3 or 4 years squeezing the lemon and taking it the most we could do, and now they're going to start saying, well, hang on, how do I keep up? And I think this is, for us, an opportunity to show the degree of the transformation and show what is there. In a way, it's almost better if you don't do acquisition, because nobody can say, oh, well, yeah, they grew because they did acquisition. For us and for the team, if we can deliver that plan over the next 3-4 years, that's exciting.
But on the UniCredit performance, how do you mitigate lower interest rates?
Well, look, I think we look at it this way. First of all, I would say we're now united, we're strong. We have very high capital, we have very high provisions. This is a strong bank, but it's highly unified, highly empowered. I'm really excited about what we can do. The second thing is I don't think any other bank kept overlays, which are fundamentally a provision to be used anti-cyclically when the cost of risk goes up, of 1.7 billion. So if cost of risk goes up in Europe, we're fine. If cost of risk doesn't go up in Europe, we will release 1.7 billion into our results. Secondly, we have been told, oh, you distributed a lot of equity out and a lot of distribution. We did. We distributed almost more than 25 billion over 3.5 years. And, but we also generated 6.5 billion of additional capital. So we have excess capital of 6.5 billion. No other bank has that much. And that's 2. 3, another buffer. These are what I would call lines of defense. Every year in the last 3.5 years, we have worked on transforming the bank. Yeah. And we've taxed our P&L by taking integration cost, about 1 billion a year. But now in the next 3 years, we don't need to take them. And so when you look at that, these are the lines of defense. But what I think people missed, because with rates up, everything floated, is not only the degree of our transformation, but if you look at UniCredit, we have an exceptional geographic mix with 40% in Italy, 35% if I take in Germany and Austria together, which have a certain anchoring, and 25% in CEE. And in terms of client, everybody goes around, and you will now understand the strategy. We have about 65% of our clients are either SME, affluent, or private. And we're trying to develop that. So we worked very hard to leverage on these strengths, on being as effective and efficient as we can on these strengths. And last year, instead of spending the usual 6 months on budgeting, we spent 3, and then we spent the other 3 on how are we going to make it happen. Does everybody down the organization knows how to execute? And we're confident. Yes.
Andrea, in terms of capital distribution, I mean, you said it won't be touched no matter what happens with acquisitions.
Well, I think
Can you give us a bit more of a glimpse?
I think it depends. But what does it depend? First of all, we've increased again the dividend payout to 50% on net income. Yep. We started with 35, now we're at 50. That will not be touched. As they say in the industry, this is sacrosanct. Then we have the share buybacks, which are composed of ordinary distribution and excess capital returns. The entire excess capital we have committed to go back to 13% and to distribute it back by 27. So you're looking at 25, 26, 27. 6.5 billion need to go back in the pockets of shareholders, in addition to the share buyback that is ordinary. That allows us to say with confidence that not only the dividend will be higher than what it was in the last few years, the dividend per share will be higher, much higher, but also the total distribution that this year we have guided to 8.5 billion will be much higher than this year in the next 3. Of course, if we do M&A, we have also said we will strive to keep the dividend per share unchanged to protect our shareholders. But part of that share buyback will, instead of going to buy our shares, to buy the shares of a target.
Okay, final question. 2024 was a whirlwind, frankly, just following the news from UniCredit. Do you think by the end of this year you'll be much bigger through an acquisition?
I am optimistic that we will, actually.
More than 50-50?
More than 50-50.
We have to leave it here, but I have so many more questions. Commerzbank or the other one?
I don't know. We'll see.
Okay. A good sport. Andrea Orcel, thank you so much for joining us.
Thank you very much, Nancy. Thank you.
So that's it for the morning program.
It's nice to have options, isn't it? Europe's boldest banker, you could argue, in conversation with Francine Lacroix. He, of course, is Andrea Orcel, the CEO of UniCredit, joining us from the Bloomberg House in Davos. Let's talk about what has been happening while we've been watching that event in Davos. European equity markets have opened. What you are seeing, basically, is a mix of domestic factors, certainly here in the UK, that is well represented, but also a very big Trump effect coming in through these markets this morning. As you can see, the FTSE 100 barely higher, the CAC 40 barely lower, but below the surface, there's some really big moves happening here. Some are domestically generated, but many are Trump-generated, Anna.
Yeah, absolutely. Let's take a look at some of the sectors that are reflecting that. And certainly when it comes to wind generation, that's a sector that's under pressure. Orsted in focus because of an update it's done around its business specifically, but the whole sector under pressure from some of the lines that we heard from President Trump yesterday. Away from that, we also see weakness in the auto sector. Autos and parts is down by 0.9%. Stellantis, the worst performer there. And that was one of the companies cited as vulnerable if we do see these 25% tariffs on Canada and on Mexico on products coming into the United States, because, of course, they import so many of their cars and parts for them into that market. So that's a sector in focus.
Yep.
Plus, we have the European car sales. On the banking sector as well, we're watching the UK banks because of some interesting news lines coming out of the FT and elsewhere that are suggesting that we are going to see the Treasury step in to protect the banks against some legal action surrounding car insurance sales. So Lloyds Banking Group up by 4% as a result of that.
You talk about the outperformers, or let's talk about the underperformers. You are seeing commodities on the back foot here, and I thought this was interesting given that you are seeing LNG prices, for example, the natural gas futures, the Dutch natural gas futures actually higher when the entire commodity sector is down. Usually when you see that dispersion, Shell tends to be an outperformer. Today you are seeing the opposite. Some of your biggest index weights on the FTSE are your Glencores, your Anglo-Americans, your Rio Tintos, Shell as well down there. I'll also mention very quickly, we talked about the Trump read-through. A lot of pain in Spanish stocks. They're down about 0.6% relative to a fairly muted market across the board. You could argue that's the Mexico read-through into that sector.
Can I also just flag Novo Nordisk and LVMH? Because actually I think there's a Trump story there as well. LVMH, for instance, the luxury trade into the United States, there's significant concern around the fact that we could see European tariffs being applied by the Trump administration. Barely a mention of Europe. Yes, we're maybe talking about this universal tariff that has been discussed by the incoming administration, but no detail on that yet. It's North America first right now. That's where the focus lies, and therefore maybe Nova gets a boost off the back of that, LVMH gets a boost off the back of that.
It's really interesting how we turn North America first in terms of his focus into, well, that's okay then for China and
the rest
Europe.
of us, we're fine.
You know, for the next 5 minutes maybe, but we'll see what happens in 10 minutes.
There was also Diageo was underperforming, Mercedes-Benz was underperforming. We talked about the automakers. You flagged this earlier as well. Stellantis is going to be one in focus. There are certainly, it is North America first, but the ripple effects are very much here in Europe.
Absolutely. Fascinating to see kind of how the market is dealing with all of the details around this. We'll show you the gilt open as well. Gilts are now trading on the back of the wage data. We'll come back to that in a few minutes' time, Kriti, and talk about what's going on in the UK.
Yeah, absolutely. But I think it's fair to say here in the UK, around the world, a lot of the focus is what's happening out in Washington, D.C. That extends even to Davos. Let's go there now. President Donald Trump, of course, as we said, saying he plans to enact previously threatened tariffs of as much as 25% on Mexico and Canada as soon as next month. Trump, of course, making the comments as he signed dozens of executive orders on his first day back in the White House.
The golden age of America begins right now. From this day forward, our country will flourish and be respected again all over the world. During every single day of the Trump administration, I will very simply put America first. Our sovereignty will be reclaimed. Our safety will be restored.
Let's get more of Bloomberg White House reporter Jenny Leonard, who, of course, is joining us out of Davos. Jenny, is it fair to say the focus in Davos is what's going on in Washington?
Yeah, it certainly is. And Davos is really getting underway today. So I think we'll see the reaction to some of the executive orders that the president signed on his first day in office, and obviously the things that he didn't do. We saw, yesterday a slew of things that he promised on the campaign trail that he delivered on. The biggest surprise, however, I would say, is that he didn't go with tariffs on day one, which he had, of course, promised day in and day out on the campaign trail.
Yeah, Jenny, let's talk about tariffs. Let's talk about trade. So Trump's saying that he is minded to put a 25% tariff on Mexico and on Canada, and then when pressed said, yeah, well, maybe February 1st. How is that kind of line around tariffs and nothing on China yet going down in Davos?
Yeah. Well, we'll get a lot more reaction today. I will say it's interesting that he went for the Mexico-Canada tariffs first and sort of established a deadline that is a little bit different from the executive order he signed, where he established sort of a study writ large of every single trade agreement the U.S. is part of, so that his cabinet secretaries can essentially by April 1st say, hey, we should stay in this, or hey, this is what we recommend you do. Of course, that also plays into none of his secretaries on the economic front have been confirmed. So, the meetings on trade can't really happen the way they would if they were already in those agencies. On China, however, it's really interesting that he has completely abandoned his hawkish tone from the campaign trail. We reported he's really in negotiating mode. He is interested in traveling to China. He's interested in maybe making another deal with Xi Jinping. He is obviously keeping his options open, as he always is. But I would say that a lot of people really expected him to at least go with the tariff he promised on China for its production of fentanyl and its precursor chemicals, and we've seen none of that.
Jenny, is that the surprise? And what do people do with it? We thought we had a handle on what was going to be happening here, yet we get a press conference in the middle of the night, European time, that throws out all kinds of surprises. What are people saying about what happens next and the volatility that comes with it? If Trump is in negotiating mode, that implies quite a lot of volatility. Is that what people are now expecting?
Yeah, I think they are expecting that, and they should expect that. If you think about 2017, when he took office the first time, we see a lot of parallels right now. He is talking about going to China. He did that in 2017. If you remember, he signed deals with Boeing and other companies while he was on the ground in Beijing. He seems like he's open to doing that again right now without talking about the broad tariffs that we've seen. He is, however, also talking about looking at the U.S.-China Phase 1 trade agreement, which we have reported for years now that China did not live up to it. So that's basically him creating a pretext, if he wants to use it, saying we're studying if China's complying with it. And if it's not, we will take action. And that action can range from, as we've seen over the last, 8 years, from we're making deals, we're banning TikTok, we're not banning TikTok anymore, we're going into a trade war, we're, signing a massive trade deal. So volatility is, I think, the name of the game for the next 4 years.
Absolutely. And we're going to get used to it, and it's going to be quite the ride. Jenny Leonard, White House correspondent for Bloomberg, joining us from Davos. We'll see what President Trump has to say over the next 24 hours. Davos certainly tuning in. Let's talk about how the markets are tuned into this story this morning. As I've already indicated, we are seeing some pretty significant differences emerging in how the equity markets are responding to the Trump trade this morning. Broadly, though, as you can see, in terms of the core six, quite a positive picture. Novo's up quite nicely. LVMH is having a relatively good day. Ferrari not looking too bad. It could be exposed as well, you could argue, to Trump tariffs, which haven't emerged yet from a European perspective. Elsewhere in the market, though, we are seeing some weakness coming through. You are seeing the car sector broadly under pressure. You are seeing, obviously, the wind sector seeing some significant turbulence. We'll come back to those stories as we work our way through the rest of the market session here in Europe. But what have we got coming up next from Davos?
Yeah, coming up from Davos, then, Guy, we'll return to the slopes. We'll be speaking to Rafael Grossi, Director General of the International Atomic Energy Agency. That is live. That's coming up next. US futures pointing a little bit higher, flat to positive this morning in their first response to Trump. We'll get more on the markets, of course, as we go through the programme. This is Bloomberg. Welcome back to the opening trade. We are 17 minutes into Europeans' equity session and a first chance to react to the flurry of conversation starters we heard from President Trump in the United States yesterday during his inauguration, his more informal address after the inauguration and his executive orders. All of that added up to actually European equity markets that are pretty unmoved. The FTSE making some modest gains, financial services, banks in focus, more on that in a moment. The CAC 40 is flat, the DAX is down by 0.1%. So that's the overall picture. Let's cast our minds forward to US futures, and this matters more perhaps than usual because, of course, US markets were closed yesterday. And so, yes, for the United States, this is also the first chance for these markets to react, stock markets at least, to react to what we heard from President Trump yesterday. And so we see yields coming down a little bit. We see US futures moving higher, Dow futures, E-minis and NASDAQ futures just a fraction higher this morning.
It's really hard to gauge what's going to happen and how the next few days are going to be taken by these markets. Really hard to read into a reasonably neutral inauguration and then a far from neutral press conference delivered by President Trump a little bit later. All of this, though, certainly having an effect, you could argue, in Europe this morning. Let's take a look at some individual sectors. The wind sector certainly front and centre right now. The energy sector also certainly being watched very, very carefully. As you can see, we are seeing some big moves already. Vestas down hard, 4.5%. Orcel updating on its story in the United States going forward from here, which just looks more and more difficult. The numbers coming out really being taken badly by the market and more pieces of bad news emerging for this business. The stock down by 15%. The Trump effect in Europe certainly manifesting itself within the energy sector.
And certainly another sector that we're going to keep an eye on is autos as well. You are seeing a lot of the stories in terms of BMW, Volkswagen, even Stellantis really taking a beating. That Mexico piece, Anna, is going to show up in the car makers.
Yeah, absolutely. We'll watch that. And financial services and banks in focus here in the UK. Financial services, because Aberdeen, the money manager, up by 7.5%. This on the back of some better flows data coming through for that particular business. And some in the banking sector expecting some kind of reprieve against some legal action they were possibly facing on car insurance sales. Lloyds Banking Group and Barclays up with that in mind, Guy.
The morning certainly underway in Davos. Let's talk about what is happening there. We join now a conversation. Bloomberg's Lisa Abramowitz is standing by with another great guest. Lisa, over to you.
Thank you. Thank you so much, Guy. Right now, I have to say, we are at the cross sections of this energy transition at a time where a lot of executives here are so concerned about what could happen with armed conflict. With me now is someone who really is at the cross sections of both of those issues. Rafael Grossi, he is the Director General of the International Atomic Energy Agency. And Rafael, thank you so much for being with us.
Great to be with you.
I want to start with one of the sides of your mandates that we haven't talked about as much over the past couple of years, and that is the energy side. Donald Trump, President of the United States, declared a national energy emergency as a result of the need for AI technologies, but also to prop up oil and gas sectors in the U.S. Do you see nuclear energy being a part of that?
Well, it is. Certainly, what I see is a return to realism, is that fact that people are recognizing that without the contribution of nuclear energy, many of these things, including, like you're mentioning, the important, indispensable AI contribution to our economy, is going to be impossible, if not too difficult. So nuclear energy is a base load energy, is a reliable energy, is dispatchable energy, and it's something that we know how to do. So it has been done, it is there, but we see the need to increase, some say triple, the present percentage of nuclear energy in the world. We will have to see about that, but what is clear is that this is happening.
Is the template what we've seen with Microsoft and 3 Mile Island, the idea of restarting old plants to get them on board in order to fuel certain tech companies? Or is that just a one-off with a number of select situations?
It's wider than that. Certainly, that is a very good example. But we see other high-tech companies, Google, Meta, OpenAI, you name it. Hardly a week passes without a new agreement being signed by one of these companies with nuclear sector producers and builders.
I was looking at a study that showed that it's taking a disproportionately long time, and it's taking a disproportionately expensive amount of time to create nuclear power plants.
This has been the case because we haven't been building nuclear power plants, at least in the West, for many years. In the 1970s or 1980s, we were checking them out by the month. If you look at it, in the United States, we have more than 90, almost 100 nuclear power plants in France and in other places. But then that stopped for a number of reasons. And of course, you have to reconstruct the supply chain. You have to do a number of things. If you look at other parts of the world, for example, China, where at the moment, as we speak, they are building more than 20 nuclear power plants on top of the 30-something they have, and then they come cheaper and faster. And this is because the process has continued. And what I see now is that this is, of course, coming back here.
Are they less safe, though?
No, they're perfectly safe. One of the jobs of the IAEA is to make sure that the nuclear energy in the world respects the highest safety standards. That is one of the functions of my organization.
So one of the questions I was going to ask you is which countries are getting it right? Do you think that China is the template, in a way, for the West to follow?
To say the template, I wouldn't say that. I think that they have taken the decision that, in the palette of energy alternatives they need to have more nuclear. They have a proportionately much less proportion of nuclear. In the United States, you have around 20%. In China, it's less than 5%. So all this build is because they are catching up.
The other side of your mandate is the one that keeps me up at night, these sort of existential risks around nuclear war. And I am wondering, at this point, CEOs at Davos have indicated that an armed conflict is their #1 concern heading into the next year. How much closer today are we to some sort of use of nuclear weapons with Russia and Ukraine, or even with Iran, than we were, say, 6 months ago?
Well, we have to make sure, and the IAEA is one, not the one, but one of the factors, one of the tools the international community has to make sure that that doesn't happen. And that you do through the non-proliferation regime, the set of norms and practice and guidelines that are there to make sure that all of these positive things that we're talking about, all this nuclear material that is there to propel our economies and to have all this prosperity, is not used, is not deviated to nuclear weapons use.
Well, do you see that the acceleration in uranium production, nuclear-grade uranium production in Iran, which was something that we saw over the past couple of months, has that continued? Does that concern you?
It continues. It continues. It is really high time we go back to some framework for what is happening there. You cannot have a country that is enriching uranium at this pace, at those levels. It's, by the way, something I've discussed with the Iranian government. I was, last year in Tehran discussing with President Pezeshkian and with the foreign minister and others. And I think there is a clear conviction, at least on my part, that this is something that needs to be put back on track. And I'm looking forward to engaging very, very soon with the administration in Washington to look into ways and means to get to that.
Well, I was just going to ask, what could the Trump administration do that you think would increase the chances of that framework to rein in some of that?
Well, it's clear for everybody. We are engaging, of course, with Russia, with China, with the European countries, but it is clear for everybody that the United States is indispensable in bringing this whole compact of issues into a logical whole. So there was an agreement that existed before. President Trump decided that that was not the path he wanted to follow. So now we need to come to terms with how to deal with this, excluding, of course, a war. We don't want more wars. President Trump has said that. So what we need is to find an understanding, a way for Iran to do civil nuclear and to have that in check. And this is going to be our mission in the next few weeks.
Rafael Grossi, thank you so much for being with us. I could speak with you all morning. Rafael Grossi, Director General of the IAEA. Kriti, Guy, Anna, back to you.
Lisa Abramowitz there in Davos with the head of the IAEA. We thank you so much. And of course, a stunning backdrop that we are seeing. We're not done with Davos. We've got plenty more in the program. And of course, later throughout the week, we're going to head back to Switzerland in just a few moments. Speak with Benoit Bazin, chairman and CEO of the construction materials maker Saint-Gobain. That conversation happening next. In the meantime, these markets, they seem kind of subtle here. You are seeing some slight outperformance in the FTSE 100. Marginal moves to the upside in the French index as well. But an underperformer in those Spanish stocks. That Mexico read-through showing up in quite a big way. We're going to dive into the markets and, of course, the Trump impact in Davos shortly. Stick with us. This is Bloomberg. This is the opening trade. We're at 30 minutes into today's session. On the surface, you are seeing some pretty flat trades here. The stock 600 is flat. The outperformer, though, is the FTSE 100 at the bottom of your screen, higher by about 0.2%. The crucial underperformer is actually showing up in the Spanish index, down a whopping 0.7%, and the selling continues. A lot of that, Guy, likely to be a little bit of a reaction to the Trump trade and the Mexico comments.
The Trump trade is all across these markets this morning. You can see it in so many corners of the European equity space and elsewhere. There are, though, some other pieces of news that we've been paying attention to this morning. It was fascinating listening to the banking panel and also Francine's conversation with Andrea Orcel, talking about the challenges of putting large European banks together. Those challenges apparently are a little easier to navigate when it comes to the asset management industry. Generali and BPCE this morning reached a preliminary deal to combine their investments unit. This effectively creates the second largest asset manager in Europe. So deals can get done. Banks seem to be where the challenge lies. Asset managers look a little bit easier to do deals in.
Yeah, we had a lot from Andrea Orcel on that front, didn't we, and what he thinks is going on behind the scenes. Let us go to some of the other areas in these markets where we see evidence of that Trump trade. Let's take a closer look at Trump's executive order blitz, his inauguration, all that he had to say yesterday, what that means for markets, and we'll do that firstly through the lens of the dollar. Bloomberg's Valerie Teitel joins us now. And the dollar really whipsawed in the last 24 hours, then, Valerie, based on expectations around tariffs and where they might or might not fall.
Yeah, I think it shows us a few things. One is that the market was overly long dollars, and the fact that we didn't get any hard and fast and no shock and awe tariff announcement coming from Trump just paved the way for a weaker dollar. Now, we did get that hint from Trump in the Oval Office when he was talking to reporters, talking about that 25% tariff on Canada and Mexico. So that trade has come back a bit. So he, I guess, failed to do any shock and awe when it comes to trade. He also failed to mention any cryptocurrency, anything in the executive orders when it came to the cryptocurrency sphere. Remember, Bitcoin hit a new record high yesterday on anticipation that there could be some market-friendly, cryptocurrency-friendly executive orders. We didn't get that yesterday either. So maybe the market is a bit more focused on what we did not get from President Donald Trump. It's only day one, though. Let's see what day two has in store for us. Volatility is the name of the game at the moment.
Volatility is the name of the game, and announcements coming at unusual times of day. We remember it from the first Trump presidency. No doubt it'll be a feature of the second. Valerie, thank you very much. Bloomberg's Valerie Teitel with the things that were and were not said by President Trump yesterday and what they did to markets. Let's get back to Davos. Bloomberg's Francine Lacroix is there, of course, and can talk a little, perhaps, about the construction sector and how it's handling a new Trump presidency. Francine.
Hi, Anna. Good morning. There's a lot to talk about, of course, how the chief executives here in Davos would deal with possible tariffs. I'm delighted to be joined by Benoit Bazin. He's chairman and chief executive officer of the construction materials maker Saint-Gobain. Thank you so much, Mr. Bazin, of joining us here in Davos. No doubt a lot of the chief executives that I met were looking at the inauguration yesterday. Do you worry about inflation and tariffs, and what does that mean for the construction industry?
In the US, it's actually our #1 country for Saint-Gobain in terms of profit pool. We invested a lot in the last years, more than $7 billion. We are very local by nature, so we are not much impacted by the tariffs. We have 130 plants in the US. We produce materials locally and we sell locally. Housing is a big need in the US, will be supported by a good US economy, so I'm not worried. We had a good run in the last years, and I think it's going to continue.
So does that mean that when you look strategically at where you want to grow, the US will be one of your main markets? And does that mean that you could also grow through acquisitions in that market?
Correct, because we have transformed Saint-Gobain in a big way in the last 5 years. We reshaped 40% of our turnover in and out. North America was a big strategic investment. It went from 10% to more than 20% of our sales, 37% of our profit. So yes, North America will continue to be significant. Altogether, 2/3 of our profit now comes from North America, Asia and emerging markets, and 1/3 from Western Europe. So geographic expansion of Saint-Gobain will continue to be on the agenda as #1 priority, including in North America. We tripled our size in Canada in the last 3 years. So Canada, US, even Mexico recently, we made a large acquisition. So yes, North America development will remain on top of our priority.
But that means that you could also look at a further acquisition in North America if you see at the economy, at the growing rates that are expected. Is that going to actually be at the expense of the rest of the world?
We have been very active around the world, in North America through acquisitions, but also organic growth through CapEx. We had $400 million of growth CapEx as we speak, starting a new roofing line, a new plasterboard line in Florida. but we also made large acquisitions around the world. The largest in 20 years of Saint-Gobain has been in Australia. Last year, we are number one now in building materials in Australia, also a growing country with population growth, immigration. We have an acquisition that we are about to close in India, Middle East, Fosroc, because we grew a lot in construction chemicals, Mexico, Middle East, India, Asia Pacific. So it's all around the world. We have a very solid balance sheet for Saint-Gobain. And last year, we made roughly a bit more than 5 billion euros of acquisitions, and we are in good shape to continue.
I was going to ask you about Chryso and the fact that you are more and more actually going into these chemicals construction. How big will that be within the group? Do you want to grow it to a sizable size?
It's already sizable because we are at 6.5 billion euros pro forma sales. It's 2.5 times more than what we had 4 years ago.
But percentage, it's still quite small.
Well, it's growing fast. It's already 12-13%, and it's even more in the profit pool. And yes, we have a plan to grow much bigger than that in the next 4 to 5 years. Why is that? Because construction chemical is at the heart of our strategic vision, worldwide leader in light and sustainable construction. Those additives provide performance to the building materials and sustainability. So we'll continue to be active on construction chemicals within the geographic development of Saint-Gobain worldwide.
And of course, this also helps with a lot of emissions. But if the world is turning towards a more Trump-like era, does that mean that emissions won't figure quite as much in terms of the top priority list when you build materials?
You know, the green value of buildings is there. It could be energy efficiency. It could be carbon embedded. It could be recycled materials. It makes the buildings and the building materials more efficient. So for me, sustainable construction against extreme weather, unfortunately, we have seen the impact in the US, we have seen the impact in Spain. Sustainable construction, it's good for the building owners in terms of value. Right. A good value is brought by better energy efficiency. A good value is brought to the insurance by resistance against extreme weather. For instance, today in the US, we have roofing shingles that are paid back by the insurance if they are better mix, better product against extreme weather, hailstorm, hurricanes. So sustainable construction, it's not about just CO2, it's about the benefits to the people against energy efficiency, against extreme weather. So it's all going to continue because it brings value to the owners, whether it's in the US, in Canada, in Europe, or in India.
I mean, I imagine this is more for new constructions. What about retrofitting? So when you take an old building and actually you make it so much more greener to save energy, do you see the pace of change in retrofitting going the same way as it did before?
We have to double or triple in the next years. I give you just one figure. Last year in France, and it's official statistics from the conveyancers, and it could be true the same in the US, there was a 25% discount for the bad energy efficiency buildings and a 20% premium from the good energy efficiency. It's the same in the US. You would not buy a house with lead painting, with asbestos in it. You will not buy a house, or you will buy it with a discount if it's leaking on energy. So again, the value of good buildings, not only for the benefits of comfort for the people, well-being, acoustic in a classroom, visual light in an office, is there to stay.
How much is the cost of energy weighing on your profits?
Well, we had a very good run in terms of price-cost spread within Saint-Gobain. You know, we increased the margin, and 24, it's not yet public, but we already said that it will be a record margin above 23. So every year in the last 4 years, we did run Saint-Gobain with double-digit margin and increasing the margin year after year. So we have been able to cope with inflation on energy, inflation on materials. So we are with solutions value added for the customers and therefore able to cope with any up and down in the energy.
But where are you expecting energy to go? Again, the Trump administration could unleash cheaper energy through producing more oil and also LNG. Is that helpful for a company like Saint-Gobain?
You know, the energy cost is lower in relative terms in the US than what we have in Europe. So it can bring more benefits going forward, but altogether, again, it's not the number one criteria in terms of the cost breakdown within Saint-Gobain, and we know how to cope with it. We have hedging in Europe when it's a bit volatile. If it's a bit cheaper in the US, why not? We are moving towards green energy. You know, we decarbonized 45% of the intensity of Saint-Gobain in scope 1 and 2 of CO2 in the last years. We'll continue because it's good for Saint-Gobain in terms of competitiveness, in terms of commercial differentiation. When you have an offer to a building owner, corporate world, president of a university in the US, they want to attract better students, better teachers with a good building, not only in terms of acoustic, not only in terms of air quality, but also in terms of the embedded carbon. It makes a more attractive place to study.
I mean, I haven't really asked you about inflation, the sticky kind of inflation, not the one by tariffs. Is that your biggest concern for this year?
Well, it's moving down. So we will see interest rates coming down from the central banks, which is a bit helpful towards the economy altogether. So I think we'll see a bit more of that. We saw it in Canada recently. We saw it with the Fed. We'll see it with the ECB. So I think it's moving in the right direction. So the worst is behind, clearly within different countries in Europe. Step by step, we are moving up now to positive territories in terms of volumes of activity. We saw it in Eastern Europe. We are seeing it gradually in other countries.
Benoit Bazin, thank you so much for joining us. That was the chairman and CEO of Saint-Gobain. With that, I'm going to send it back to you in London, and of course, we'll have plenty more throughout the day.
We certainly will. Francine, thank you very much indeed. Much more to come from Davos as we work our way through the session. We're going to be heading back there very soon, actually. A conversation coming up with Mistral AI's CEO. Arthur Mensch is going to be joining us shortly. The discussion obviously centering around the developments in artificial intelligence, what's happening with chatbots, what is the next step that we are going to see? How does the energy story fold into all of this? That's coming up next. This is Bloomberg.
Welcome back. This is the opening trade, 8:44 here in London, 9:44 if you are in Davos. Welcome to the programme. The European equity market picture then looks like this. Modest gains, really modest gains in some places across these markets. Flat to positive then for European stocks. Basic resources, the weakest performing sector, autos and parts also under pressure. Perhaps some Trump effect in there. And the EV sales numbers lacklustre. They came through early hours this morning. Financial services to the upside along with banks getting some gains there from some interesting UK and corporate news flow. Now, the transformation of business in the age of artificial intelligence is one of the themes at this year's World Economic Forum. Let's get back to Davos, back to Francine, who has another guest with her, this time to talk about AI.
Yeah, Anna, thank you so much. We're joined by Arthur Mensch, the co-founder and CEO of Mistral AI. I have to say, this is one of the companies that most chief executives want to know more about, but also meet the co-founder, Arthur Mensch. Thank you so much for joining us. Look,
thank you for inviting me.
You really are the talk of Davos, because so many people want to try and understand whether you can, with Mistral AI, really be a rival to Anthropic, DeepMind, and all of these other generative AI companies. Do you feel a bit of weight on your shoulder?
Well, I think we do have some weight on our shoulder in that we are the only European company that is providing what we provide. We have made some great progress there, and we have a lot of customers. And indeed, that's one of the reasons why we're in Davos is indeed to continue developing that aspect.
So how is your big business developing right now? How many customers do you have, and what's the target?
It's developing in Europe. It's developing in the US as well. Yeah. We feel a blank space there because we have... We have the customization, the portability of our platform, the capacity to deploy on VPC, on premises has been critical to many of our customers in the US and also in Europe. Mm-hmm. So we've been growing in those two regions. And one thing that we're announcing actually today is that we're also growing in Singapore, where the concerns around data governance, around sovereignty as well, are also strong. And that's something that we've been addressing.
What's your biggest challenge in going against competitors, formidable competitors like OpenAI, but also Meta and Anthropic?
Well, I guess the challenge, but also the opportunity is that we're smaller than them. Which means that we have less coverage, but when we engage with partners in Europe, when we engage with partners in the US, we go in depth. We work with them, we train models together, we train systems together, we understand their problem. And so that has been critical for growing. That's what we need to continue. We're scaling our breadth, but we still want to be in depth. We have a solution team engaging, finding solutions, and going all the way to the delivery.
I mean, some of the biggest AI companies, of course, are rushing to raise money. How's your fundraising going?
Well, startup is always raising money, but we have plenty. We've proven that thanks to the talent we have, to be more efficient than the others. We have a lot of compute, but we have less compute than our competitors. We still have managed to produce state-of-the-art models in different sectors. And so that's what we need to continue doing. We will obviously be continuing to accelerate, and that might require new fundraising.
But you don't need fundraising right now.
No,
you're all set for a bit.
I'm not in Davos to fundraise. No.
Okay. So what are you in Davos to do exactly?
So we're in Davos to grow, to meet our customers, existing customers, new prospects as well, to meet our partners, the cloud partners we have, the GSIs that we're working with, So I'm meeting with Capgemini, who we're working with. I'm meeting with Microsoft. I'm meeting with all of these people.
How often do you get asked whether someone can take you over? Do you have the big companies?
That's a question we have oftentimes. We didn't start the company. We left big tech, big US tech to create a company in Europe to show that Europe had something to say, and that's still the project. And so the independence we have is something that we value dearly.
So you're not for sale?
We're not for sale.
Would you IPO?
Of course, that's the plan.
So how much do you think you're worth right now?
Well, I guess that's the investors to say, but the rate of growth has been quite tremendous. It's been hard to keep pace with in terms of growing the team in particular. And so, no, everything is going on well.
Andrea, are you ever frustrated that you're based in Europe? I know you seem to take in like a badge of honor that actually you're a European trying to fight some of the Americans. There's worried about regulation, competitiveness. Do you feel you're supported enough?
Well, I like to look at it from a positive point of view. Europe has a lot of strength, in particular the talent pool it has access to. The people that are building AI, including in the US, are actually mostly Europeans. And so the opportunity we had, and that's also the thing that we provide to our customers, is the expertise. And I think Europe can come together today and realize that we've been innovators. We're a continent of innovators. We need to keep being innovators. And AI is an opportunity to continuously innovate. There's a lot of other companies that are building that. I'm thinking of ACML. I'm thinking of all of the AI startups that we're working with in France and in London. And so let's not look at the bad things. Effectively, we have a tendency to play a little too much referee in a $1 trillion race. But we have the strength, and we just need to have the will to create in Europe and to innovate and create value there.
I mean, do you think that there's a first mover advantage in this industry, or is it really execution and innovation that will win?
I mean, as in any industry, you have first mover advantage, but the AI is going to be a revolution. It's going to be a long-lasting revolution. It's going to take decades to actually be rolled fully to enterprises, rolled fully to the way we actually behave and the way we actually deal with computers. So, and a lot of things, and we are realizing that enterprises are a bit struggling with realizing the value of AI, and that's where you need to partner deeply with someone that can help you get the expertise, distill the expertise of your company into AI systems that can then help you drive the productivity that you're expecting. So we're only 5% there. And so everything that is sitting on top of model, all of the orchestration part, all of the managing data, all of the customization part are things that we still need to figure out. And I think we have a very good head start there.
Well, that's incredible. If you're at 5%, I mean, there's so much that actually can happen and change and transform.
Yes, that also makes it challenging. We need to innovate constantly to change the way our models behave, to bring new modalities, to make them more efficient, to make them more customizable. But at the end of the day, we need to get them to delivery, to get them to change our lives. This is going to take years. This is going to take years in the consumer space and in the enterprise space, and we are there to help our customers do it.
So as you said, you actually did progress in the US, or actually you entered the US in May. What's your progress there?
We've just signed a blue chip Nasdaq company last week, so that's great progress. They're moving into production, so that's great. We have a few other customers that have been. So it's probably like one of the many customers that we have. The science team has been growing there as well. We have 30 people working on multimodality in particular, so vision models. And the thing that we're opening now is Singapore. So we now have like different offices. We have one in London as well that has been growing.
Arthur, we're almost out of time, but I want to ask you, what's your AI utopia? Where do you see us in 5-10 years? Do you have a blueprint, a very clear idea in your head of what we'll be using, how and when?
Yes, I think we're going to be talking to machines, and the way we interface with computers, the way we interface with knowledge is going to be very different. It's not going to be computer and mouse. It's going to be you talking to a librarian that has access to the entire world knowledge. And so the future is great in that respect because you can learn faster. You can propagate services in places where you couldn't bring services, in healthcare, for instance. And so we have many things to build to get there, but the way we're going to be interacting with technology will be very different in 10 years.
Arthur Mensch, thank you so much for joining us on Bloomberg. That was the co-founder and chief executive officer of Mistral AI. With that, Kriti, I'm going to send it back to you in the studio.
Thank you.
Friends, in Lockwood, they're having a very important tech AI conversation over in Davos. We thank you so much. It's fascinating that she keeps asking, and she said the same question to Andrea Orcel as well. Is the competition in the States at the end of the day? He's making the comment that actually maybe they should be looking eastward, not westward.
Yeah, I don't think we know the answer to these questions yet. I think everybody's trying to figure it out. I find it so. Here's what I think is really interesting over the last 24 hours. We started the show talking about the idea that there was all these tech kind of visionaries, you could argue, at the inauguration. It was really tech-heavy. But was it tech's last generation that was at the inauguration? You could think of the obvious names. Is the new generation in Davos, is the new generation elsewhere? Like Sam Altman's in Davos, you've got Arthur Mensch in Davos, you've got the people that are kind of making the next steps. Is that the last generation that we're looking at the inauguration? Is that the establishment of tech? Are they about to be disrupted by the people that we're talking to at the
Are you
World
saying they're
Economic
aging
Forum?
out of technology?
No, I'm just saying,
happens to us all, Chris.
The technology sector is relatively old. You think about it, this is a kind of post-2000s.
But they clearly think their interests align, don't they, with Trump now? And we'll just see how long that persists.
Is that, but are they protecting their sort of dominance at the moment by being close to Trump? Is that what they're ultimately trying to achieve here, by making sure that they're as close to this administration as they can possibly be, like standing right next to it as the Trump inauguration happens?
And the TikTok CEO was one of those. He clearly has a lot on the line, and we've heard from Trump that he will another executive order, giving another 90 days to try and find a buyer for the US part of TikTok. But will that be enough protection for those businesses that are doing business with TikTok in the States?
I guess they're friends again. We should remind everyone that the initial idea of a TikTok ban came from Donald Trump under his first administration. But it seems that he's now, especially after a visit from the CEO to Mar-a-Lago, now in the same boat. Take a listen to what he had to say about the future of TikTok.
Essentially, with TikTok, I have the right to either sell it or close it. And we'll make that determination. And we may have to get an approval from China, too. I'm not sure. But I'm sure they'll approve it. And if they don't approve it, it would be somewhat of a hostile act, I think. But it's good for China if it gets approved.
All right, so the new president of the United States talking about potentially selling it. He's already kicking it off by saying, I'm going to be a deal maker. And there's some real contenders, including in that row you were talking about. Amazon, a potential contender. Walmart, a potential contender. This affects the likes of Oracle, which holds the cloud around it. A lot of the folks in that $1.3 trillion row have a potential interest in TikTok.
Yeah. And we were talking just yesterday, Guy, about the role that this TikTok story plays in the wider China-US trade conversation, which has slightly blindsided me that it could take on such relevance. But clearly, from what Trump was saying yesterday, the president thinks that this is a card he has to play at his disposal.
The surprise is that China was barely mentioned yesterday. Like, TikTok got more reference than China did. This is the world's second biggest economy. You think about what has been happening in terms of the build-up to this presidency, this expectation that tariffs are going to be a big feature of the landscape between China and the United States. We didn't get it.
Would you argue it's one and the same, though? That what happens to TikTok is kind of sets a precedent for what happens to not just Chinese companies, but any companies that are abroad and considered a threat to the United States?
That's why it's in the crosshairs, isn't it? It's all about security and the way that the US views that. Yeah, I mean, no mention of China, no mention of Ukraine. Panama and Mars got more mentions. And thank you for John Authors for counting the mentions of all of those. Let's just take a quick look at some of the things that are coming up later today. We do have some data points in focus. We've had the UK data, of course, already. German's EDW survey. We will be hearing a little more from Rachel Reeves. That's really interesting, given the data we saw out the UK this morning, the wage data and the pressures fiscally.
She's in Davos tomorrow as well.
She is in Davos. She'll be speaking to us. We'll have Netflix earnings out a little bit later, and the Davos focus will be on what happens in Ukraine. Vladimir Zelensky and Schultz also going to be speaking at that event.
Francine Lacroix has already had a busy morning. She is going to continue with that busy morning. The Pulse is up next. JP Morgan's EMEA CEO is going to be joining. We've got Straight Street CEOs, Bank of France governor is going to be on deck as well. It's going to be a busy next hour. Plenty more coming up out of the World Economic Forum in Davos. It's day one there. Trump +1 as well. That's the real story. This is Bloomberg.